Hey everybody, I am Charting Man Dan of TheChartGuys. In this video, we are going to look at, I guess it's a live stream. In this live stream, we're going to look at the broader market really quickly and the dollar. We're going to check in on Bitcoin, Pepe, and a bunch of altcoins. I've got about 30 minutes before the Celtics start, so we're going to go a bit rapid fire here. And we start off with the broader market. The NASDAQ and S&P 500 are up at 8-month highs. Bulls in full control. It's all about the FOMC this week. So Wednesday, 2 p.m. Eastern, we're going to see the FOMC have a significant reaction to the dollar, to the broader market, to the metals, and to Bitcoin, and to crypto. I keep saying this, but it's a point that I want to repeat. Everybody looks to Wednesday for the volatility from 2 p.m. to 4 p.m. That's 2 hours. Big money that's moving hundreds of millions of dollars is going to be moving it Thursday and Friday. So I watch what we're doing on Wednesday, but over the years, I've seen so many times where we get the initial move Wednesday in that 2-hour period, and then Thursday and Friday we do the complete opposite. And so just be aware that, okay, we can get information Wednesday afternoon, but Thursday and Friday is when the real money is going to be moving around in response to what we get from Powell and the Fed. The dollar is trying to confirm the first daily uptrend in over 5 weeks. That would be notable if the bulls were able to pull that off. I don't really care if the bulls confirm the daily uptrend tomorrow. I care if it follows through on the FOMC reaction. If it does, it's going to be a double bottom at weekly support. And we generally know, we know generally speaking, that a strong dollar is bearish for crypto and stocks and metals. And so if this double bottom holds and we bounce for a few weeks, that can definitely put some downward pressure on crypto. And if we look at the dollar, bouncing the last few days, Bitcoin consolidating the last few days, the dollar has a hold of support. Bitcoin had a rejection from resistance. So definitely still an inverse correlation there. It's not as strong as it used to be. It used to be, there was a period of time where it was, the 5-minute time frames were inverse to each other. But it is still inverse enough to be paying attention to. I just keep an eye on it on the longer term time frames. So, on, mic kinda off. Check it real quick, but I don't know. Seems good on my end. We're going to go with it. We're time limited here, but thank you for letting me know. As long as you can hear the words, that's what's most ideal. I used to be able to, quick aside here, I used to be able to have a junk laptop camera. I used to talk into my laptop mic, and you could hear the fan kick on. It sounded like a motorcycle, and I would get 10,000 views. And that was back at a time where it didn't matter, and the world was such a better place back then. Anyways, Bitcoin. So Bitcoin had a 4-hour tightening range on the weekend, over the weekend. And again, not surprising. If you assume that you're going to get a tightening range over the weekend, you're going to be right more often than not. We then had news Sunday of another regional bank that's been in the headlines getting bought out by JP Morgan. So consolidating the banking sector. And we know that Bitcoin has been attached to that narrative to a certain degree. But we had a bull break in response to that, and then we double topped at 30,000. Bears did a good job playing defense. And then as soon as we reject and then lose support, we know daily consolidation is then underway. And it's the same thing back here. As soon as we reject, and actually it's almost the same level, not quite. As soon as we reject and lose support, daily consolidation underway. So the rejection is step 1 for the bears. Taking out the higher lows is step 2. And you got to tip your hat to the opposing direction when it happens. You got to say, all right, nice defense, bears. You did the job. And so we have a 4-hour stair-step drop right now. And if we see a bull break of that, we're going to be anticipating a 4-hour lower high is the result of the bounce on Bitcoin. No, it's not going through my webcam. Alright, quick fix. Oh, there we go. Okay. We're back. Got it. Yeah. All right. So we're going to scout a 4-hour lower high to be the result of the next bounce. We're going to watch the retracement size on that. And again, the bounce hasn't even started yet. A lot of work to do. And the bulls have to see 50% of that bounce retracement. So keeping a close eye on how much bounce follow through we get. And looking back here, we've got an example where we dropped and the bounce was over 50% retracement. And that was back on that fake alert. So what do the bears need from here? The bears need a break of 27,000. That is the line in the sand. So essentially you can view this, you can condense it down to the 2-day time frame if you want. And you're viewing it as the highest move we've seen, the highest level we've seen, the low of the recent pullback, lower high is now set, and if we hold 27, needing a bullish reaction to the FOMC pretty much, then it's going to be a continued tightening range. Essentially what the FOMC is going to do is it is going to confirm or negate the weekly bull flag. This is a weekly bull flag. If it's a bearish reaction to the FOMC, we're going to break 27,000 and make the bull flag a lot less likely. If we hold 27,000, the bull flag remains in play. The burden is on bears to prove to us that this is not a weekly bull flag. And they are fairly close to doing so, but bulls are holding on for now. And if into tomorrow we get this 4-hour bounce underway, next thing you know, FOMC will be less than 24 hours away. And again, it would at that point, we would be able to say it's very likely that the FOMC reaction is going to dictate the break of this tightening range. If it's a bear break, we're going to zoom out for monthly consolidation. Monthly consolidation would then be taking place. And big picture, the bulls definitely need more follow through because this is a 4-month bear flag at this point. Bulls need to see a move up into the 40,000 range to try and negate the 4-month bear flag. So bulls definitely don't want to start showing weakness just yet. The dominance chart is showing us that Bitcoin has been dropping faster than most altcoins today, which is not usually how it plays out. But again, this dominance chart, it's a percentage of dominance, but it is certainly acting like resistance with this long-term quadruple top now. And so we're going to keep an eye on that. It's actually, we've hit it 1, 2, 3, 4, 5 times essentially. So we're definitely going to keep an eye on that. If the Bitcoin bulls are going to continue being the leaders in the space, they need to break over this. But now you've got this Pepe coin. And I must admit that I was very tempted to be sarcastic and with a straight face call it PP coin the entire stream. But I would have had a lot of messages from some angry people. But it would have been a good one. So PP coin is the latest meme coin bonanza. And a lot of people hate this about the crypto space because they want it to be taken seriously and Bitcoin can change the world. And then you got this, getting the headlines and it diminishes the not reliability, it diminishes the reputation of the space. And I understand that absolutely. But I also understand it is a trading instrument where you can profit. And, I look back at the coins that I've made the most money on, and it's definitely Bitcoin, Ethereum, but Litecoin's up there. I mean, there are these low cap volatile movers that you can make a lot of money on. Obviously, this is very thinly traded. You got to use stop losses. It's only on a few exchanges. A lot of people are holding out and hoping it, gets added to Binance or some of the larger exchanges. But at this point in time, it is the rage right now. It's all the rage. And so just be aware that this is going to get the headlines and it is going to get the attention and it is going to have the boomers continue to roll their eyes at the space. And there's not much we can do about it. I guess the only thing you can do about it as an individual is try and educate people about real projects and things that have utility and things like that. But it's the same thing with stocks. We got penny stocks, scam penny stocks are all over the place. And then you got real stocks that have, brick and mortar stores or whatever kind of assets. So it's just the way that the world goes. But it is nice to at least see some profit coming into this space. You just don't want to be holding this bag. So I did a paper short, a pretend short just because I can't short it. But one thing that the theme of this video that we're going to talk about a couple times here is looking for volume climaxes to indicate tops. And not necessarily just looking at high volume and saying that's the top, but looking at the high volume and saying I'm now actively scouting a top because of that high volume. Same thing as a dump and looking for a bottom, but in this instance, it was looking for a top. And so I saw this 4-hour candle forming, and I could see one thing that I do often is anticipate volume. How do you anticipate volume? Well, let's just use an example. We have 15 minutes left in this 4-hour candle. So let's just say 25% left in this candle. The volume of this candle is currently just over half of the previous candle. I can say extremely confidently, this 4-hour candle is going to have less volume than the previous one. You can do the same thing with high volume. If you are you're a third of the way through the candle's time of forming, and you've got 60% of the prior candle's volume. Just match up the percentages. If you got half the candle, half the volume, all right, it's in line. But you can tell when it's going to be a high volume candle or not based on that simple, math. If we're a third of the way through the candle, we've got 2/3 of the volume, we're going to see higher volume. So I could see that shaping up on this 4-hour candle. So I could say, all right, potentially the highest 4-hour volume in days, I'm watching for a temporary top. I then zoomed into the 15-minute time frame and looked for the 15-minute to have a climax. So I want to see a volume climax on the longer term candle, and then I zoom in and try and pinpoint it with a volume climax on a shorter term candle. And we got it. We got a 15-minute highest volume candle that we had seen in many hours, knowing that the 4-hour was going to be a high volume candle as well. So I then zoomed into the 5-minute time frame and said, all right, well, I don't have a fake short entry, a pretend short entry at that point, but I said, all right, I'm looking for a 5-minute lower high. I want a good risk reward scenario. So this little bounce, I said, this is the 5-minute lower high that I would be shorting. I placed my stop over the high. That's my one attempt. If it stops me out and keeps running, I'm not going to go right back and try and short it again. I'm not going to play counter momentum and keep beating my head against the wall, stopping out, stopping out, stopping out. Why are you fighting the trend? One chance if you're fighting that trend. So be picky. And so we confirmed the 5-minute downtrend and then talked about taking some partial profit and sticking a stop over the high. And we then rolled over, and the remaining trade that I was looking for was for bigger picture, the remaining position was for bigger picture 4-hour consolidation. And so I would have stopped out. It would not have played out. We had a 4-hour inside bar, bull break, and with the new high, I would have stopped out, pretty much break even, maybe a tiny loss, but just a paper short of, giving an example of how I use a volume climax to pinpoint a position or to help with timing of a position. So we did finally get 4-hour consolidation, and we zoom in. How did the back burner go? Well, back burners are working well. 15-minute oversold conditions marked the 4-hour higher low. And that was a bounce of almost 50%, 45%. So that tells us bulls are still aggressively buying dips. If you are trading long on PP, I'm going to do that my whole life now. If you are trading long on this coin in this state, just in the state that it is in, knowing that there will be a daily volume climax and we will pull back 40% plus, the last thing you want to be doing is holding the bag when that happens. So stop losses are a must, but it's the kind of scenario where if you want to try and leave a runner, you're selling partial. So let's say I, make an entry on 15-minute oversold, or even, I wait for the 15-minute stair step to break, and then that's my long, and my stop's under the low now. If you sell partial and then stick your stop under the low, you give the possibility that it continues running, and if it doesn't, and that's the top, then you stop out, break even, or tiny loss. So that's the way, and that's the way that I traded Bitcoin blue sky breakouts plenty of times. You trade the shorter term oversold conditions, looking for the longer term high or low. You sell a bit into the bounce, and then you try and let the position play out from there for a longer term continuation move. And so Pepe is going to be in full control of the bulls as long as 4-hour EMA 12 support keeps holding. We will be watching for a daily volume climax eventually, but we also have to keep in mind we don't have much data to be going off of. We don't have much previous price action to be able to compare daily volume on this move. And again, there's going to be a nice short eventually, but just have to ensure that you're not constantly trying to short a blue sky breakout, because we know these are powerful, especially with the meme hype. And one of the reasons that this is performing so well is because it is so cheap. Cheap, right? So what does cheap mean? Well, when my neighbor, who's a good old boy, calls me up and asks about buying Dogecoin, he talks about how cheap it is and how much money he'll have if it goes to a penny, right? So normal people don't understand market cap and things like that. So they look at this and they do the math in their head. Well, if I buy it at 0.0000000, and if it goes up to a penny, then I have this much money. It's people trying to get rich, right? So that's why it's performing well, and that's why it's attracting people that want that quick gain, that quick win. So just be aware that that's the market environment that creates these kinds of conditions, and just ensure you're not a bag holder. But just treat it like it's, money floating around, or no, it's just numbers in cyberspace. This is cookie coin, whatever it is. I mean, honestly, the way that I trade stocks is I view it like it's a meme coin. When I'm trading Tesla or Apple, the fact that I view it like it's just numbers in cyberspace that don't mean anything is what allows me the emotional detachment to be able to trade well. So really, we should be approaching everything that we're trading in that manner. But certainly with this coin, can it keep going up? Can it double from here? Sure, why not? As long as people keep buying, and as long as shorts keep getting squeezed, if there are even, I don't even know where you can short, or if it's easy to do. All right, so now on to some other altcoins. But again, 4-hour uptrend, heading back to the recent high. We would have to fail the recent high and break 83,000, if the top is going to be set. If that breaks, then we say, all right, top's in for now. And we look for first hourly oversold conditions or other kinds of backburners. So ETH, similar to Bitcoin, again, go to the 2-day time frame if that clarity helps you. And it is a head and shoulders like pattern. Little left shoulder with support at 1823. Little right shoulder, neckline 1785, excuse me. And close to confirming the 2-day downtrend. If we confirm the 2-day downtrend, we're still in a weekly uptrend. 1688 is our last weekly high or low. But at that point, we start to have a big enough pullback to create the space for a weekly lower high to be the result of the next bounce. As a bear, that is often how I enter my shorts. I wait for a big enough pullback that I have no position in, where many people say, oh, I missed the move. I then look for the bounce to get the lower high. Same thing I just did on the Pepe trade example on that 5-minute time frame. All right, I got some indication that a volume climax might be shaping up. That's a big enough 5-minute pullback where I scout the lower high, clear stop level, and then look for it to play out. And so ETH, if we see another leg down and lose weekly EMA 12, we will then be creating the space for that to be a potential setup on the weekly chart. So bulls really want to hold weekly EMA 12 to try and keep this move going. FOMC is going to dictate things. ETH BTC has been weaker, and we have to confirm the 4-hour uptrend. We have not confirmed a 4-hour uptrend on ETH BTC in weeks, at least a week. And so we have to, whenever we top out, hold the low, confirm the 4-hour uptrend to try and set a weekly higher low on ETH BTC. Because the longer that ETH BTC stays in a long-term downtrend, again, the more it's just going to be the Bitcoin show. And that's going to be good news for a lot of people in the crypto space, the Bitcoin maximalists. And if we do see Bitcoin dominance break this long-term top, in my opinion, that's going to be confirmation that it's the year of Bitcoin over the year of altcoins. And that would be notable. So we'll keep an eye on that. And if that were to happen, ETH BTC very likely will be dropping to fresh lows and keeping this longer term downtrend intact. Litecoin, same thing, tightening up, close to confirming a 2-day downtrend. We're still watching the weekly equilibrium, which is nice and clear on Litecoin, where we've got our high, higher low, lower high, and we're watching for a higher low compared to 65.39. We just don't have a lot of confidence that it's being set just yet. And so if we do break bear under 84.21, then it's continuing its retracement in this weekly equilibrium that we will eventually look for a break sometime perhaps in June, maybe July, depending on how long it takes to tighten up. But I do love the clarity on the Litecoin weekly tightening range. LTC BTC is trying to shape up a falling wedge. Why do we look for a falling wedge? Bear break into a bounce, bear break into a bounce. It shows me bear breaks with no follow through and a bit of bear exhaustion. So let's go to the 12-hour time frame. Again, just trend line guides to help me recognize, all right, it's a falling wedge as long as this downtrending support line continues to hold. And keeping an eye on this, because if this were to break bull, that would increase the probabilities that Litecoin USD is shaping up a weekly higher low. And so just keeping an eye out, because big picture, LTC BTC is trying for a monthly higher low. We had the bulls in control of Litecoin for 6 months. We now have had relative weakness for 5 months. And I would expect eventually a monthly higher low to try and form. No sign of it just yet. But again, keeping an eye on that bigger picture. ICP USDT was a lead bouncer bull, but now it's a big pullback. And again, equilibrium. When you have this kind of volatility, you look for equilibriums. Breakout, you retrace over 50%, you scout the equilibrium. You retrace over 50%, you look for the equilibrium. So we're now scouting a higher low compared to 504. The bulls must shape up a 4-hour trend change in their favor for a daily higher low to be shaping up. And eventually, probably next week, we'll see what FOMC does, but we're going to look for a break of this tightening range. And we'll then look for some nice clarity from there. So the bulls have to, if we're going to set a daily higher low, we need a big enough 4-hour bounce to create the space for a trend change to try and shape up. So what I just talked about shorting, when you look for the lower high to short after a big enough pullback, you can do the same thing as a bull. An aggressive bull is going to look to go long either into the weakness or on a bull break of the stair step. Lower high every candle when that breaks bull. A patient bull is going to say, that's a big enough bounce after it happens. No position. Again, some people are going to say, oh, I missed the bounce. I should have bought. No, it's a big enough bounce that now has me interested. I scout the higher low. I have my clear stop level. That's either the daily higher low after that bounce, or I stop out because I'm wrong, because it would be a red flag to give that all back. It's just a different trading style. It's a more patient trading style. It's a little bit less reward because you're not nailing the bottom, but it's also less risk because you have a clear stop level to be going off of. And I did this with a Microsoft swing entry months ago in my IRA that's going well. It was the same thing. I watched a key longer term support of 212 hold. We then bounced from 218 to 241. That's over a 10% bounce for Microsoft. That's a lot. Oh man, I missed the bounce. I should have bought into the fear. I missed it. What a jerk. I see the daily consolidation. I know we have to confirm a daily uptrend to set a longer term bottom. So I enter. I use 230 as my stop. I enter on this day. Let's zoom in. Once we're clearly setting the daily higher low. So I'm in on this candle. My stop's under 230. That's either the daily higher low that's going to lead to a trend change, or I'm wrong and I stop out. And I missed stopping out of this position by 33 cents. And now at this point, it's a lot higher than that, and it worked out really well. So up 32%. from where my stop was that missed by 32 cents. Anyways, just an example of different trading style where, I love playing the breakdowns and the extreme oversold bounces, but there are plenty of ways to play this game, and that's just another one. Binance. Binance is a potential rising wedge that we're still keeping an eye on as the bull breaks have lacked follow through. We've got a nice tightening daily range as well. This is how I had it originally, right, like that. And I think in the last video I talked about, this is, or it might have been over the weekend. Either way, this is my trend line guide, but price levels matter more to me. And so the fact that we held 315 is a hold of support. So now it's just your standard tightening daily range, potentially setting a daily lower high compared to 345. If we break 318 and 315, that's your clear bear break. There's been relative strength recently in Binance. And we're going to keep an eye on Binance BTC, which is also trying for a monthly high or low, similar to Litecoin BTC. Keep an eye on that. Keep an eye on the longer term here. Binance was stronger than Bitcoin for 6 months in a row, very solidly. It's been weaker for the last 4 months, and now it's trying to level out. So we're either going to break this tightening range bearish, and then we would zoom out and watch weekly support of 299.50, or bulls maintain support and are able to break bullish here and shape up a potential monthly high or low on BNB BTC. And obviously the direction that Bitcoin breaks its 2-day tightening range is going to have significant implications on the direction that Binance breaks here. And it's going to be the FOMC that dictates it, which again is, as a technical trader, I really dislike when you have a nice clear setup, but it's a fundamental unknown event that is going to dictate the direction that it breaks. You can still trade it, it's just less ideal. All right, good question. Is it a systematic or discretionary? When I'm trading partial positions, is it systematic or discretionary? Most of what I do is discretionary, meaning I'm looking at a bunch of different things, I'm reacting to a bunch of different things, and it's very, for me to be systematic, a stair step strategy, and again, Google ChartGuys stair step, if you don't know what that is, that's systematic. This level breaks, you make an entry, that's where your stop goes. Very straightforward. Most of my other style of trading is discretionary based on a lot of different factors. And so for me, it's a lot to do with EMA 12. If I am exiting a partial position on a bounce, let's say I'm playing first 15-minute oversold conditions. We'll just use Pepe as an example. So I'm using first 15-minute oversold conditions. Generally, I'm going to exit a third to a half at EMA 12. And you can see that's where we stalled out. And we struggled there for a half hour. Eventually got over it. But oftentimes you will see that rejection and head back to the lows. So another factor will be, at what point do I get break even? If we're up at 15-minute EMA 12 and I can sell a third and then have my break even slightly above my stop, or I can sell half and have my break even under my stop, then that is going to influence things as well. Also, what's my conviction of the longer term time frame? Do I think we're going to head to higher highs? Do we have strength in the broader market, weakness in the dollar, confidence, euphoria? Then if I'm trying to let the trade play out longer term, I'm going to take a third off instead of a half. And that was my adjustment for, I'm exiting too early. If I'm playing an hourly oversold bounce and I'm exiting on the 5-minute start of that bounce, I'm exiting too early for what the trade game plan is. So I then changed to start selling a third instead of a half to try and, let the position play out longer. Is dollar cost averaging in long-term positions reasonable strategy in my mind? Yes, if you are accepting that money is gone. For me, anything that is long-term, no-touch, dollar cost averaging, no stop loss, risk is 100%. And so if that's your mindset, then absolutely. ADA and DOT can go way lower than you think they can, just like they can go way higher than you think they can. So you have to mentally prepare for that and emotionally prepare for that, because the last thing you want to do is be dollar cost averaging into something. It drops way lower than you think it can. You weren't planning on risking this much money, and all you got to do is look to the cannabis sector, and that's the story of the last year and a half in the cannabis sector, unfortunately. And let's just pull it up for all you crypto people to see. CGC, how the mighty have fallen. We go up thousands of percent. We go down 99%, 98%. It's just an absolute bloodbath. Anybody dollar cost averaging in made the worst decision of their trading life. When my friend's child was born, I gave them shares in the 20s somewhere, and I'm not going to be the favorite uncle that made them rich. But when I gave that money, $0. Maybe in a decade it'll be worth something. So that's the mindset you got to approach dollar cost averaging. All right, a couple here. Sol tightening up. Again, 2-day time frame, same as Bitcoin. No difference here. We got our low, high, higher low, lower high. Bulls must hold 2036. It'll likely be the FOMC reaction, not necessarily Wednesday, but Thursday, Friday, that leads to the break, one direction or the other. You could draw some trend lines if you want as some nice visual guides. I like that one. Ascending triangle, maybe. But bulls need to get over 24 if this is going to be a potential ascending triangle. What time we got? Oh, I gotta go. So Tomo, daily higher low is set. That now makes 80 cents a must-hold support, because if we lose it, it's a confirmed daily downtrend. Have we confirmed a 4-hour uptrend yet? No. We do not have as much confidence in a daily higher low being set if it happens without a 4-hour uptrend versus if it happens with a 4-hour uptrend. So we must hold 80 cents and break 91 to confirm the 4-hour uptrend to be a nice convincing daily higher low. There's definitely an uptrending resistance line we can look at on this coin that we keep rejecting from. But the daily uptrend is intact, and 80 cents is now the most important short-term support. Do I have any clues about how the FOMC reaction will go? I honestly don't. I mean, I was talking with Jungle Funk Joey the other day, and I said, I bet we go bull, and I was talking about the broader stock market. I bet we go bull into the FOMC, and if we get a bull reaction initially, then we look for that to be a temporary top. If we consolidate for a day or two before the FOMC, that changes that setup for me. But I honestly have no idea. I know there's a lot of people positioned short in the market. The crypto bears are a lot more comfortable than the broader market bears. A name like NVDA today just squeezed out a whole bunch of shorts, trades sideways for a month after going straight up for months. We're up 180%, and then we trade sideways when consolidations do and the valuation doesn't make sense. And today was just a wave of shorts closing out their positions. So the pressure is on bears. Bears' backs are against the wall in the broader market because we keep grinding higher and the fundamental narratives keep coming in. Banks collapsing, employment, inflation, rates, whatever, credit, debt, blah. It's just price. And price is overpowering all those narratives. So I put myself in a SPY bearish position. I am not comfortable at all heading into the FOMC. I put myself in a Bitcoin bearish position. I'm a lot more comfortable because I have a lot of space to work with. I've got resistance levels and lower highs. So it is a different tale for crypto than it is for stocks right now because we've seen relative weakness in crypto over the last couple weeks. Do I like my new Instagram? No. I don't like Twitter. I don't like any of it. Morning, Robert. All right. If the NASDAQ consolidates tomorrow by breaking the low of today and enters daily consolidation, then we can see NARA and Riot break daily support. We're not far away at all. So that is in play, but the requirement is NASDAQ weakness and red. I appreciate you all tuning in. Only 68 likes. No. Not gonna cut it. I appreciate you all watching. Have a great rest of your evening. These Instagram scammers, there's one new one every week. It's as a social media, as someone who puts content out on social media, it's so disheartening to have, like, I can't communicate with YouTube commenters like I used to. Twitter's gotten better, but Instagram, the scammers, you know, I have friends from high school messaging me like, hey, someone's messaging me from your account. It's just the worst. Maybe AI can fix it. All right, we'll check back in soon. Thanks again.